Hello there, my friends. Chris Marcus here with you for Arcadia Economics, and today a new guest on the show, but someone I've been really excited to talk with, followed his research for years, and really doing a great job, who is Lior Gantz over at Wealth Research Group. So Lior, great to have you on the show. Excited to dig into the markets, fascinating things happening in the world, and as I know you dig into investments and also are out seeing a lot of the world, great to have you on the show. And how is everything going today, my friend?
It's everything's going well, and I'm excited to be here.
Well, I know you're calling in from Thailand tonight, yet still following the markets around the globe. And perhaps just to get started, would love to get your take on what's going on with these debt loads. Seems like a lot of things may be coming to a head, but where do you see this situation standing?
Um, Very hard to time what's going on right now in the in terms of the debt levels, because when you have a rising population, just growing population in numbers, the amount of debt in a monetary system like we live in will always be greater. So there's just no way to cut debts down substantially. You can cut them down for a few years because demographics are there and you're booming, and you can like collecting more taxes in general. But overall, since 1971, um, it's very hard to create a surplus. There's only one nation that has a meaningful surplus, and that's Singapore. But it's only 6 million people, and it's very different than the rest of the world because it's an island, etc. If you want to study that economic miracle called Singapore, you can. But for most countries around the world, they're dealing with 50 to 100 to even more percent of GDP in debt, and it will continue to go on. Now, at some point, obviously, same as with a snow avalanche, for example. Just it takes just one more little flake, and that thing topples over.
Mm-hmm.
But you just don't know when that will happen. But you can be prepared for it. So there's there's literally no reason to time it, and there's all the reason in the world to prepare for it. In other words, everyone has their own income level and their own experience level, and what they're doing with their savings. And therefore, a person with no savings, he needs to prepare for this in one way. A person with millions of dollars, he needs to prepare for it in a different way. But the awareness of it is basically the most important thing, because then you're able to prepare for it. So I think the world is basically divided into two: people who believe that this system is sustainable, and people who believe that this system is not sustainable. And within the people that believe the system is not sustainable, there are people that really believe it, and therefore they're doing something to prepare. There are people that are just learning about it very
Right.
passively, and they're going about their regular lives because they can't um, internalize that something as horrible as a Great Depression or a debt jubilee, something that is severe will happen. And within those that really are preparing, there are those that are over preparing, and that's a mistake as well. And there are those who are doing this in a healthy way. So when you have everything that you own in gold and silver, and you're also going into um, social circles that are very um, I don't want to say conspiratorial, but that's the word for that, right? You're also robbing yourself of the opportunity to live a great life because you're always thinking that everyone's out to get you.
Right.
And it's just important to not sacrifice your own life, your family's life, your friends, your time on this planet by over preparing. No one needs 20 life insurances, right? Um, so with that said, it's just important to, how does it work practically? So instead of having 100% of your net worth in guns and ammunition and vodka and duffel bags full of cash, etc., just have enough. So for each person, that is a different measure. But for me, I have 12 months worth of living expenses in a duffel bag full of cash that is stored, obviously, in my main residence. Now, with that's and that's in, they diversify within the five major currencies: the euros, the dollar, Swiss, the Aussies, and the Canadian dollar. Now, on top of that, I keep about 5% of my net worth at all times in physical gold and silver, and that's stored in vaults in practically every continent on the planet. So that's it. I'm prepared, right?
Hmm.
5% of the net worth, 12 months worth of cash, and then you can diversify your own portfolio, even politically and geographically. So you don't need to own real estate only in the country that you reside in, or only in the country that you're a citizen of. You can do it in many areas, and there are property managers very easy to do it remotely without ever visiting,
Right.
uh, your assets, your cash flowing rental assets. So it just depends. But the main thing to remember is that the best way to prepare is by having just great active income. So either you're a very indispensable employee in a corporation that you work in, or you've developed enough business skills to run your own business, or to join an existing business. It doesn't matter. As long as your active income is uh, is large and growing, you will always be prepared, because you have a great source of income coming in. And that's where I think many people are not prepared, because there are 17 million Americans currently on minimum wage, which is huge. And you have about half of the working population, so 75 million people, earning about 30K a year pre-tax. So there is no middle class anymore in the United States. Basically, there are rich people, and there are working class, blue collar, and below. And I think it's very important for people to recognize that this American dream of retiring at 65 and golfing on the meadows of Florida is over, and that they need to find some sort of a way to either join the rich, or create a situation where their income is not only dependent on US sourced domestic businesses. So either build a secondary business, or an online business, something that you can that is on top of your main career. If your current path, if your current career does not lend itself to explosive growth, if you don't see somebody in your corporation that is earning, big amounts, then you need to reconsider your career paths, right? And so I think that's one thing. And the second thing is, I don't think it's ever too late. So
Right.
there's literally nothing stopping anyone from just resetting and going a different route. It's a huge undertaking and a huge commitment, but it's just, how committed are you to living a great life? So um, I think it's very hard um, to make it happen in today's world. Very competitive, much more competitive than ever, and therefore financial education is that important. And it just seems to me like there's literally no mainstream outlet. If someone is born just goes with the mainstream, he will never be financially educated. Just
Right.
no way. He needs to seek out information. So that's why I founded Wealth Research Group 3 years ago, because it's a labor of love, because I understood there's a plague, just a global epidemic in terms of financial education, and I really wanted to be part of the solution.
Yeah, I appreciate what you mentioned there, Lior. And you do have a great site that I'd really recommend folks to check out because, like you said, once you have awareness, education, knowledge, sure, the situation may be how we like or not, but at least that gives you the ability to do something about it. And I think you're quite correct in how you mentioned a lot of the typical jobs that we've had here in the US aren't perhaps going to exist going forward or might change. Certainly, as a former equity options trader, that's what I was realizing. Where is this industry going to be around? So I love what you talk about, taking things in your own hands, creating your own business. And I know you've been really successful at that. So maybe you could share a little bit for folks maybe that are working in a corporate job that they don't feel great about. And what was the process like for you in terms of finding something you're really passionate about and then turning it into a business?
I think for me, the first thing that I realized is that I need to find partners before I find the right business. So I really tried to network in my early 20s
Right.
with people that are looking to build businesses until I found the right partner. And then we started moving towards what is the talent that we can bring to the table, or what are the skills that we can bring to the table, and what industry can we penetrate and enter with our resources and with our talents, and grow. So I think those two things are critical: partnering up and finding something that is within your means to get started without lots of leverage. Because if you
Right.
make mistakes, leverage will kill you, and there's literally no need. So there are many businesses that you can start with very low capital expenditures, and and grow them big time. So I think if you're stuck, first of all, find a partner. And for you to
Yes.
find partners, you need to speak with people, you need to communicate, which is, one of the reasons people like you create channels, right? You get to speak with so many people per week,
Hmm.
and it's a great strategy. In fact, I can tell you that, just as a side note here, when I was 13, my father went bankrupt. And so I started working when I was 13 and saving up. And what I did was I started coaching basketball, like private lessons, in the most affluent neighborhood in the country I resided in.
Hmm.
And the strategy was basically to connect with the parents. So the basketball coaching was just a way to get into
Right.
somebody's
Right.
living room and ask some questions. And my earliest mentors were the parents of these first graders, second graders that I was teaching how to dribble.
Hmm.
So it's very important to network. I used to attend many conferences in order to find people that are like-minded, and I think that's a great opportunity, and it still remains a great opportunity today. So that is one thing that is critical. And then what happens is you can find people that are way ahead of you, and you can basically piggyback off of them if you're able to bring enough value to the table. And that could be sweat equity. So you don't need to bring money. You can show them that you're willing to work twice as hard as they do. Because sometimes people that are well off also want somebody to run their errands,
Hmm.
or not errands like wash my car, but stuff that matters. And that way you can really leapfrog your way to success. So I think that is important, and I'm not seeing it easy. In fact, I in one of my first businesses, I knocked on the guy's door at 8 p.m. with a business plan. He didn't know me. I just knew he was in a business that I wanted to get into. So it takes conventional and unconventional thinking to and some guts. Some don't try to impress anyone. Try to be of value, right? So if I was trying to impress him, I would knock on his door at 8 p.m. He's thinking I'm a lunatic when I'm like 19 with a business plan. But anyways, Chris, to the point, um, I am the sort of person that is very reluctant to risk my existing income sources. So I love having an income source, and on top of that, building other income sources, which I can then dry up the ones that are not good and continue with the ones that are good. But I don't like to take giant leaps. I'm not one of those people that believes in cutting all ties and starting something anew. I believe that if I make a decision, I'm committed to the success of this new venture. But there's no reason to dry up everything else in my life in order to do that. So that's another really important suggestion that I have for people. If you want a career change, just make sure you're not stressing yourself out by doing that. A lot of people say, I have such and such months of savings, I'll cut this work I'll start the other one, and I have my savings. But that puts you in a box that you don't want to be in. So um, that's another important thing that I think people should really be aware of.
Yeah, it's great advice, especially having worked in corporate America, which is really a much different mentality. And I know a lot of people often feel a bit trapped, but like you said, especially finding something you like where it can even be, maybe you love investments, but you love teaching kids basketball and a creative way, just getting out and meeting people. And certainly with the internet, one thing that I've found is that if you approach people respectfully and are considerate of their time, a lot of folks love talking about what they do. So by all means, like you mentioned, Lior, just getting out and contacting people, say, hey, I appreciate what you're doing, like your work, and you actually can network quite successfully. So I think that's great advice for folks. And along those lines, again, you talked about taking skills that you already have or areas you're familiar with. And I know in your interviews before you've mentioned in terms of investing in companies that you can understand. You mentioned about how if you can't understand it in 30 seconds, kind of, maybe not the right thing, but maybe you could talk a little bit more about that, some of the ways that you go about in terms of investing, looking for opportunities and the type of companies that you go after.
Okay. With about 70% of my net worth, I don't play or toy at all. So about 70% of the net worth is always going to be invested in what I call high quality dividend raising businesses. Now, dividend raising, when companies are able to raise their dividends, it's an effect, not a cause. The cause that allows a company to raise their dividends is because they're able to have more and more profits every year. That's also an effect. The cause of that is that they have either a very high competitive advantage due to some reason. One reason could be brand loyalty. Another reason could be economics of scale. So they're able to produce or serve their client cheaper. Another reason is favorable regulations. Think cigarette companies. It's very hard to, even if you and I wanted to, raise 100 billion and compete with Marlboro. Very hard regulatory to do that kind of stuff, to enter into the cigarette business. Or I can name other industries that do that. And then another important competitive advantage is if there's really a superb management team in place. So you have all these competitive advantages you're looking for, and if companies are able to retain them, they're able to have more and more profits, excuse me, and then raise their dividends. Now, within companies that raise their dividends, there are companies that are able to do that for decades. So a group of companies that are able to do that for 25 years or more consecutively, no matter what the interest rate is, no matter if it's Republican or Democrat in place, no matter if you have wars, conflicts, whatever. Companies that are able to do that are superb companies and are worth looking into. Now, a great company is not a great investment necessarily, because a great company can be deemed as a great company and therefore priced as a great company, and therefore there is minimal opportunity within that. So what you want is to find those very rare moments, and those moments can be years even, when the market is adjusting its price for this company, for this stock, wrongly. Now, that's the entire trick, to make sure that what you are analyzing is the right notion of the company's future, and the majority's view is the wrong one. I'll give you an example. In 2011, there was a huge theme called the end of PC. Everyone thought that computers will be gone and we'll all do tablets. Yeah. And Intel, who makes the chips for our personal computers, was pressured down in price. it was so pressured down in price that it traded for very low valuations, extremely low. And that's when personally I got in at about $20 a share. It's now around 47 or 48. So for a company like Intel in 7 years to go up about 2.5 times fold is a lot, considering they have a very attractive dividend. And that's what you're looking for. You're looking for mispriced, excellent companies with the majority of your money because you don't want to risk it. That's the only way for a part-time investor to beat the index. If you're even looking to beat the index, if you're not, then you can invest in the S&P 500 with the majority of your money, and you'll do very well because the 500 top companies in the U.S. will keep keep growing like a Swiss clock very accurately, and it will continue. But you need to realize that the S&P 500 grows at about a 7.5% clip every year, and these investments can grow at about 12 to 15% every year. So a very big difference in terms of if you're investing for 40 years, that's the difference between having $1 million or $15 million in your bank account by the time you're looking to put your legs up. So an important distinction. And then you've got the other 30%. And I love to diversify between cash, physical precious metals, rental real estate, and speculative opportunities. Now, when I assess a company that is a small cap company for a speculative opportunity, I focus about 90% of the time in getting to know management personally. And because the external risks to those kinds of companies that have zero competitive advantage because they're getting into the markets and they're not established at the markets, the only competitive advantage that they have is if they have a lion running the company. And if they do, then he can penetrate the market. So that is one thing. Or I'm looking for a very cyclical industry, and I'm looking to find it after a huge bust. So that's how I built a portfolio over time. Always making sure that 7 out of every $10 are in safe companies that are growing at double digits per year, reinvesting those dividends, which is called compounding, and then with the other 30% diversifying in assets that are outside of the stock market and speculating with what I call high risk, obviously enormous reward opportunities. And Chris, if you go to wealthresearchgroup.com/top, you will be able to access, the listeners will be able to access all of the reports, the PDF reports that we put out on these subjects, like what I'm doing with my own portfolio, how we're preparing for a crash, how to handle yourself in a bear market. Many of our, most highly ranked reports are on that page. It's just a wealth library on that page. So if you go there, you'll find everything that we can cover in a short interview.
Yeah, and a lot of good points you mentioned there. In particular, something that I've done a lot more since I've left the trading floor is really, like you said, looking at the management, looking at who's actually running the company. Because certainly in the last 20 years, whether you go back to Enron had great numbers, but if you were looking at the management and felt something wasn't right. So there's really a lot that can be learned by looking at who's running the show. So I think that's a great thing to have in mind. And also with the dividend stocks, another advantage that, as I've thought more about that, and as you mentioned, when you have dividend coming in, it's like an income. So it also gives you you're not quite as dependent on the stock price. So if you have companies that are great over time, it can give you a little insurance there.
So from 1972, they conducted an essay up until 2014, and dividend cutting companies have outperformed only one sort of company, and that's a company that doesn't pay any dividend. Companies that have dividends have outperformed cutters, and companies that have raised dividends have outperformed companies that just have steady, consistent ones. So dividend raising is the best performing group of stocks in the world, bar none. You can go back even before 1972 and look at the best performing companies of the 20th century, and you'll find Abbott Labs, you'll find Philip Morris, you'll find Archer Daniels Midland, all companies that are consistent and relentless dividend raisers. And I think it's important for people to understand that about 40% of historical returns for the U.S. stock market have come from dividends. So if you're forfeiting that, you're forfeiting about $4 out of every $10 that you'll make in your life. And the only reason you want to forfeit that is if you're speculating on companies that are very cutting edge or in cyclical industries, and you know that their growth will be able to compensate for the lack of having dividends because they're hyper growth companies. But because growth is harder to predict than having a competitive advantage, your balance should be towards safety and not towards speculation. So I think that's also important to remember. If you go to wealthresearchdb.com/bear, you'll see exactly how I prepare in bear markets in order to cash in on bull markets. Because if you're not able to anticipate bad times and be cashed and ready for the good times, you'll not be able to enjoy finding bargain opportunities because you'll already be invested in the stock market. So you will be part of the investing crowd that doesn't enjoy when companies are mispriced to the downside. So that's, I think, key.
And also the other thing with the dividend, especially if a company's raising its dividend, I often think of it almost as a fail-safe way or checkpoint that the company actually is making money. You're not just going on promises or hope, but there's a sign, yes, there's money coming in and they're giving it back to the shareholders.
Sure. Now, it is important to understand that companies also understand this. So they like to play games with dividends. So they like to continue dishing out dividends even when their profits are getting worse. So it's important to not only when you filter these companies, you need to look at the entire balance sheet and what's going on with it, and not only to trust in the dividend. Dividend is just, like I said, it's an effect. You need to look at the underlying cause. Is the company losing out to new entrants in the marketplace? Are customer demands shifting and they're not shifting with it? Are you invested in Blockbuster when there's a Netflix right around the corner? So it's important to realize that. And many companies have been disrupted. So, and many great companies have been disrupted. So it's just important to really dig in further. And if you can't, if you don't have the time, if you don't have the wherewithal, then you can definitely invest in the S&P 500 as an index, because that index is very predictable in generating some very favorable returns over time. I don't think anyone's going to make a mistake by having money put into the best corporations on the planet. Remember, you're not betting on America when you do that. For example, McDonald's, which is an iconic American company, generates 65% of its income outside the U.S. Okay, Starbucks has it's opening a branch in China every 15 hours. So think of it this way. And these are iconic, U.S. corporations, but they're working outside and they're generating profits outside. And all of, every CEO in America knows the future is in Asia. So just like you and I know that, right? So it's important to remember, when you invest in a U.S. corporation, all you do really is invest in a company that is headquartered in the U.S. and has potential to reach many countries, many emerging markets, and obviously, China, India, and the big ones of the future.
Yeah, it's a great point, because especially with there are issues with the government or the debt loads, yet at the same time, there is the rest of the world, and you can diversify and mitigate some of these risks. And perhaps last question, I didn't want to let you run without digging into this one. I know you talk a lot about the cryptos, and we've mentioned speculations in our talk today a couple times. Curious what you see going on with the cryptos. Obviously, a lot of people getting freaked out by the past year. I tend to believe that there's still some good value for the right cryptos in there. Would love to hear what you're thinking, and again, whether that's wise to look at cryptos as a speculation and how you phrase that in terms of a portfolio.
Well, for most of them, they're little startup companies that have a very high failure rate. So I would say you need to realize that you're going into a game where 1 out of 20 will probably do something with its startup.
Yeah.
So going into it, if you know that your chances to succeed are 5%, then you'll be more cautious. Now, what I think is happening is you can invest in blockchain technology and in tokenization and everything that has to do with cryptocurrencies, not by investing in the cryptocurrencies themselves. So 2017 was the mania year, and 2018 was the bust. And now we're basically like we were with tech stocks in 2001. The internet didn't go away, but most of these companies that were not relevant went away. And then you saw basically the advancement and the rebirth of companies that had actual assets and something to offer. Obviously, we know about Microsoft, Amazon, Oracle, Qualcomm, etc. All the companies that went down 60, 70, 80% in the bust, but are the biggest companies in the world right now. So blockchain technology is you can equate it to the internet. It's not going away. It's the way that it will be implemented that is important. I think one thing that you're going to see in 2019 is companies that are going to tokenize, and basically creating like their own little currency instead of handing out reward cards or where you have credit with them. You'll have a coin from them. Mm-hmm. And that is great for them because then they know the size of their potential cash flow. So imagine if all Starbucks customers had a Starbucks coin. Then the CEO of Starbucks could say, okay, my economy, all of my coin holders are 5 billion. So if all of them go and buy coffees today, then I know I'll generate $5 billion. Right. Now, that creates a very stable idea of what your cash flow is, because if people are using your coins, then you really have a better idea of what they want. Obviously, you can market to their phones better. You can hand them more coins as rewards for loyalty, etc. So I think tokenization is going to be a huge theme in 2019 for the big companies and for retailers, and you're going to see a lot of that. Personally, what I want is not to bet on which token will succeed. I want to, in the same way that I don't like to bet on which mining company will strike gold, I want to find the one that provides the equipment or provides the land for other companies to speculate with. So I like to find a company that actually builds the blockchain for other companies and then takes a royalty out of all the transactions that are happening. And I'm right now in intense due diligence finding that company out, and we're going to feature one in our free newsletter in the next few weeks here. So that's going to be big. It's a company that nobody knows about, certainly not Wall Street, and forget about the average guy. It took us months to uncover it.
Yeah. And as you've been traveling, especially out in the East, I hear anecdotally that the actual implementation and adoption of cryptos is a bit different there than what we're seeing here in the US. Has that been your experience?
I haven't seen anything regarding cryptocurrencies where I've traveled, but I haven't traveled to Tokyo or the major hubs in China in a long in a few years. I know from friends that have that you'll find it more commonplace. But I was 2 months right now in New Zealand. It's not big over there, and I'm right now in Koh Samui, which is an island, the second largest island in Thailand, and they use dollars in baht,
Yeah.
which is
And
their local currency.
and any exciting next hotspots on the tour, or where do you go from there?
Well, we're gonna head to the States from here. We're going to Park City in Utah.
Okay, right around the corner from me here in Denver. So,
Yeah.
with that said, we'll wrap up and let you get back to the great things you're doing today. Again, really appreciate having you on the show. And actually, I'm excited to go download those reports from Wealth Research Group. You do some great research. You phrase things in a way that people can understand. So certainly for everyone listening at home, I highly recommend checking out Lior's work at Wealth Research Group. And again, appreciate you joining me on the show. It's been great to catch up with you, and we'll look forward to having you on again soon.
Thanks, sir.